Hello, guys. Good afternoon, Bitcoin traders, holders, and investors. How's everybody doing today? Today I bring you this live video because today there is gonna be a big move for the crypto community, also for the markets. So right now I got my chart, and as you can see, Bitcoin went up from these lows that we had over here. Let me draw the triangle. So Bitcoin was trading in this range, this lows. All right, but it still hasn't breaking out. It still hasn't breaking out of this previous highs. So we still got rejection from there. What I'm waiting is for today's news of the federal rate cut. So I don't know, that might have an impact, and we could see a big candle just like this one. We could see a big move just like this, and that wouldn't surprise me to the downside, making it right in the money, right to 8,500 and some change. So yeah, guys, you gotta get ready. You gotta be ready. You gotta be ahead of the game. You already know. You gotta be ready to strike like a tiger, waiting for his prey. So yeah, I'm just waiting on the sidelines. I got my market, my limit order open, and if it doesn't go that way, I put another order to the buy side. But this target right here is what we're looking at. This target, does it line up with a Fibonacci extension? Let's find out. Let's find out. The previous high to the previous low to this highs. Boom. Right at the 127%. And if you want to get a little more, technical, the 618 is right at 8,336. So anywhere around these levels, I'm expecting it to move here, or around here. So we just gotta wait for the Feds to make their decision. But it says it's gonna start in 32 minutes. So at 2:30, the hell. Everybody's saying 25 points, 50 points. I think 50 would be too much. 25 points seems reasonable. But I guess we'll find out. It'll be probably that's some big news. That's big news right there. We're dealing with with currency. So if we look at the charts of gold has gone down. It was trading high at what, 1434. It's 1425. Yeah. But yeah, just a matter of time and wait. Um, you never know. It might be good for Bitcoin, and then we go boom, we take off like this, or it might be bad. You never know. You just gotta wait and find out. Oh, well. Then you got 30 minutes. Gotta wait 30 minutes. Or we can have this guy dump it and pump it again. Be hilarious. Whoa. All this dumping already. Look at that. And just go down like, ugh. It's insane. Well, Bitcoin is following gold, so we can see a little similarity. Bitcoin is going down also. Let's see. But it's not that, like, it's not going that down that much, like that hard. But it's getting hit. Yeah, yep. There you go. There you go. It's going down. It's like Bitcoin is holding its ground more than gold. And let's see what the what's that called? The US. Oof. Yeah. Wall Street is taking some heat too. The Dow Jones. And this has just begun, guys. This has just begun. Let me take all this off. Let's go to a bigger time frame. I mean, I can see Wall Street just you know going down. It's 26,900 or 26,800. It's a little setback, but it's whatever. A little Bitcoin going down too, and he still hasn't announced what how much they're gonna cut rates, and just you can see everybody's like like taking their money out, cashing out. I don't know what they're doing. But whenever he announces that rate cut, man, that's gonna be that's gonna be more to the downside. Okay, so like I said, we had that. I mean, we're still in the correction, so the correction, A, B, and C is still not complete, man. Cause C has to have a longer leg, so that's why I'm calling this. It's going to this levels right here. Right, and then within the C leg, so there's the C leg, right? Within the C leg there's a B, and C. So it would only make sense for Bitcoin to go down. I'm not trying to be a bear or anything, but that's the only thing I see right now. Notice how it can't go past the 100-day moving average. That's on the 6 hour. Like, let's go on the daily. On the daily, it hit the. Well, hold on. It hit the 50-day moving average. What the heck is this? It's like trying to get crossed the 50-day moving average, but it's not happening. It's not being let. I'm not letting it cross. So what we got here? Been bouncing between the 50 and the 100-day, and this is the 200-day. So yeah, guys. And the Williams alligator right here, which we had an indication right here that we were gonna go down right around here, right around these levels, 11,400. You see, all of them came crossing. The jaw crossed the. I still don't know what they're called. The jaw and the mouth, and the neck or something like that. Okay, the jaw, no, the lips, the jaw, and the teeth. So they all cross. So the lips cross the jaw. Oh no, the teeth. And then The lips and the teeth cross the jaw. So that's even more bearish right here. So the lips cross the teeth are around 11,428, and then it crossed the jaw at 10,162, and the teeth crossed the jaw at 10,600, what, 10,700. So we got all this indications telling us that we're gonna go down, and we are still going down. But I also see a squeeze coming in, like a Bollinger Band squeeze. So on the squeeze, you could lower the time frames to see. Yeah, he squished a little bit. I mean, it's trading like at the overbought. Squeeze to hold on, let me see. Let me change to a 4 hour. Okay. Well, over here you can see the squish right here. It went up first, and then boom, it crashed down. Well, you see almost the same thing going on right here. It went up first, and then we're just waiting for that crash to happen again. Well, I'm just waiting. At least I am. I ain't gonna, go blindly bull. Oh yeah, let me buy this. Oh man, it's going up. Let me buy it. Oh, FOMO kicking in. No, I ain't gonna do that. So, cause we're in a downtrend, man. Come on, you can see that. So, and then again, we got more indications. That whole bunch of indicators. With the RSI, we already hit almost close to the overbought. Let's look at the weekly. Okay, the weekly hit a overbought. We came down once, twice. 1, 2, 3, 4. Yep. Yeah, I counted like in waves, This is 1, 2, 3, 4, and then the last one would be 5. So the RSI might come down to the 57 area or something like that on the weekly. And then you can see this pattern too. Another pattern on the weekly. Yeah, a week of sell, a week of green, a week of sell, a week of green, and then it'll probably be red. So thought he was supposed to talk at 2. Will we have that? Maybe not. But I'll be right back.
basis points at its low here. It has now jumped back up, pricing in not as much dovishness as originally thought. And then I want to take a look at gold as well as the U.S. dollar index. U.S. dollar index strengthened in the face of that Fed announcement. It is now really approaching two-year highs here, so we got to keep an eye on that. And then finally, I did mention gold. We're going to take a look at that. It did drop on the announcement. It's right at 1421. It did dip below 1420. That is a support level. All in all, some muted market action when you consider all that's going on here today. But again, the real fireworks is going to take place in 8 minutes, just right there.
Okay, thanks for that, Jared. Let's head on to Brian Railing. He is the co-head of Global Fixed Income Strategy at Wells Fargo. Brian, you say that you expect rates to stay low across the curve for the foreseeable future. What specifically are you going to be listening for when that press conference kicks off in 8 minutes?
Well, I would like to hear from the chair exactly what changed in the data from last year to have such a significant change in policy. Last September, they were raising rates. Early October, Powell said we were a long way from neutral. And now just 10 months later, the median projections of GDP that were released in June haven't really changed. The Fed's inflation median projections just a touch lower. Not a lot has changed, yet the Fed has done basically a 180. So I'm trying to figure out what data the Fed's looking at and if they're truly data dependent anymore.
I realize they're supposed to be focused on the United States, but they did insert this line, the implications of global
Brian, I know, we look at the Fed mandate about maximum employment and stable prices, but there's been a lot of talk about the currency over the last few days. Some comments coming publicly that over in the White House there was a discussion about trying to weaken the dollar. Jared just pointed to the dollar inching up towards the two-year highs. How big of a concern is this? And yes, I know that's not part of the Fed mandate, but are we likely to see the Fed maybe perhaps go a bit more dovish given the levels of the dollar right now?
Well, I mean, obviously it's kind of pseudo-tightening when the dollar is strong as it is. I'm sure it's a bit of a concern, again, not part of their mandate. But if we really want to see the dollar start to weaken, I mean, to compete with the rest of the central banks around the world, we're going to have to take our rates all the way down to zero. And I don't think that the Fed's contemplating doing that.
You know, the other thing that they talked about was they will continue to contemplate the future path of the target range for the federal funds rate. There has been a debate within the Fed about, you know, this having the stated inflation target. Do you think they're trying to signal a change in that in the future?
Yeah, I do think later this year we'll get a change in exactly how they target inflation, being a little bit more symmetric around that target. But still, I kind of point back to last year. You know, we had a low inflation problem when the Fed was raising rates. I don't think that problem has changed. And so I just question whether the Fed is looking at some different data out there, or they just decided they made a mistake last year and they're trying to back out a couple rate increases that they now view in retrospect as a mistake. And I wish they would just come out and make it clear what they were doing here, so we could follow the data going forward.
And Brian, I just do want to we're seeing a live picture there over in Washington, D.C. We are awaiting that press conference from Jay Powell, expected to take the podium in about 5 minutes or so. Brian, given all that we've discussed so far, what do you tell investors in terms of their positioning in fixed income? What is the strategy?
Yep, so all this year we've been moving out a little bit in duration to get back to a neutral stance in terms of duration rather than the short position we were in years past. And simply looking for rates to stay low, remain low. You can hear there's an inflation or lack of inflation problem, so it's hard to imagine rates moving a lot higher under most scenarios.
I'm not going to stay here and watch all this.
Again, to a more neutral duration.
You already know what's coming. The market's going to get hit. Bitcoin's going to get hit. Everything is going to get hit. You already see it on the charts. It's just like it's preparing. So yeah, I'm going to leave this link down below in the description and everything. And I'll just, let it do its magic. got my money on the side. So it's whatever. Later. Peace out.